you will be treated as a Mauritian entity, nobody can question it. So therefore there will be no further litigation also. So as I term it, it's a sensible act on a sensible government.
One, whereas we are talking about the change in tax regime, the fact that you emphasize that the litigation will now be completely done and dusted. So that suspense, that shock, what we use the word, that is also over. So you can breathe easily.
It's over. And another very important point, Nikunj, I want to make, which may not be applicable only to India. See, a lot of countries in the world are offering tax-free regimes for people who are not the residents who are living abroad. That is why a lot of people go and live in Dubai and all this tax-free heaven. They don't have taxes. They are doing this because they want to attract capital, right? My point is that if every country is offering the same benefit, how is it that helpful in attracting benefit? I can give you an example. If I say that an excise benefit is available in Uttarakhand, right? I will go to Uttarakhand, it will attract capital to Uttarakhand. Suppose that excise benefit is not available in every state in India. What is the benefit of that excise benefit to the state in attracting investment? So we are coming to a stage now where I think we are on the cusp of ending the benefits given by individual countries to non-resident investors, because every country is giving it, therefore there is no real benefit to that country. And second thing is the OECD is insisting, after the Fonseca papers and all the revelations, that we must have a level tax playing field.
And it's high time we should have that, because as Indians we are paying more taxes as foreigners. If you're buying Indian stocks, you're not paying any taxes. But there is a concern that Mauritius route is a big route. It's a route which has been used historically both by short-term investors and long-term investors, and any changes there could disturb the market equilibrium.
See, it would have disturbed the market equilibrium very much if it was imposed retrospectively. If they had, whether Mauritius will apply or not is contradictory. Now everything is crystal clear. You think of it, just apply your common sense. Will someone not invest because he has to pay 7.5% tax? Tell me one thing, do you not invest in a company or in a land or in anything because you have to pay 7.5% tax? So I think tax, unless and until the rate of tax is very unreasonable, is not a consideration for investing. If opportunity is there, people will come. Is there no tax in America? Yeah. Is there not a bull market there? So I think it was a big, government was frightened, and I am very happy they acted.
Do you think this also is an indication that now we are no longer dependent on FII flows? I mean, the story of Indian market was that what foreigners are doing, what Gora is doing. Every day we would look at the Gora figure and then take a market view. But now domestics have taken over. That's a very mature sign.
No, I see there's nothing like Goras versus domestic and domestic versus. I can tell you one thing. The foreigners sold the Nifty to 2200 in 2009. They were the biggest seller from 3200 to 2200, and 12 months later the Nifty was 4900 post the election. So there is that what the FI does happens is a short term thing. It's not that the FI is always right, and it's not Gora versus foreigner and foreigner versus Indian versus Gora. It's the fact about the fundamentals, about the earnings. So I think I don't have all these feelings, and I think there is lot of Indian money is coming, but I think there's a trickle. I can say with confidence that in some time to come, Indian money will outnumber the foreign money.
That's actually happening.
But that should not be a reason for us to not invite foreign capital. We should invite foreign capital. We need it. We welcome it. But it is to be on reasonable and fair terms.
Are you surprised with the market move? We started gap down. Last time when we checked, Nifty was in the green. There's no panic whatsoever. Last time when there were murmurs of a P-note ban, I think happened in 2007, 2008, the market was circuit down.
I don't reveal my trades, but I bought the Nifty at 960. So I thought this is done in a very practical manner, and markets are going to, even if there's going to be a fall, it's going to be a very temporary fall. And we don't know what's going to happen. The day is still playing on. But I think it's not going to have any effect. Tomorrow will be a forgotten event. Because anything will happen 1 year later worse.
9 out of 10 times I've asked you on your market outlook, you said you're bullish. So I know the answer would be bullish here. But let's talk about the level of bullishness. At the current juncture, what is the level of bullishness?
No, I can't say. No, I asked somebody, what's your opinion? He said cautiously optimistic. So I said, last time also you told me the same. So last time he said, no, the more emphasis was on the word cautious.
Okay.
Now the more emphasis is on the word optimistic. Right? So I'm also cautiously optimistic. I think the two unknowns may be some very big foreign upheaval, which I can't rule out, and maybe a big disturbance in the monsoon. Apart from that, I don't think a good rise in this market can be avoided.
Were you taken aback with what happened in the month of Jan and Feb? I mean, a vertical fall. Today it's nice to discuss because we've recovered, but in the month of Feb it was like a scary sell-off. It smelt like 2008.
Yeah, because it's darkest before the dawn, and the last fall scares even the biggest bull, including Rakesh Jhunjhunwala.
It actually scared you?
It scared me. I mean, this kind of a fall and at that kind of valuation, I mean, we got to respect markets.
Yeah. In the month of December, when I interacted with you, that was in the middle of December, you said that the concerns would be what's happened to the US financial market. But markets fell because of crack in commodity prices, because what is happening in China. So do you think that adjustment, what we've seen in the world financial markets, because of adjustment in commodity prices, that's behind us?
See, Nikunj, I don't see, first of all, commodity prices is no indication of commodity consumption. It's not that, oil consumption gone down by 10 million barrels. 1 million barrels here, the rate of growth has come down. See, there are deeper factors for a fall in commodity prices. And my personal and very simple opinion is that only three events: a sharp plunge in earnings in the Western world, right? Or any, confidence destroying event, like, failure of a major bank or a geopolitical event. Or third thing is interest rates rising unreasonably high. Because today also the yield on the Dow is more than the yield on the 10-year bond.
Yeah.
And another thing is the bullish memory of the bulls is still too fresh. From 1940 up to 1953, I think the yield on the Dow was higher than on the bond, and the bond was much higher, but the market didn't go up. But because the bearish memory was still alive, we have seen 30 years of a bull market. So people are not going to easily dispose those assets of. I do agree, with a lot of foreign experts, including Stanley Druckenmiller, are saying that we are at the opposite of what we were in 1981. We have the lowest possible interest rates, right? And earnings also cannot go up beyond a point. We have highest ratio of earnings to GDP. So barring these three events, I personally feel I don't think earnings are going to plunge. Second thing is geopolitically and all that we can't commit, we can't know. And third thing is interest rates will rise at a very, very slow pace. So I think in the medium of interest rates not rising, the markets may not go up. They're not going to go into a major bear market.
A new word called negative interest rates has been introduced to the world now. We've never heard this before. We've never seen this before. And a large bank like BOJ is adopting negative interest rates.
Actually, I was just reading yesterday that you learn from history. But what do you know if there is no history?
Yeah.
And actually, I think the Western world, especially Japan, has entered a phase of economic history, economic situation which was never there. You never had so much prosperity. You never had such longevity of life, right? You never had this kind of demographics before. So you have huge technological and huge prosperity. You have demographically very, very old, you have old societies, right? And you never had such low interest rates. So we have entered a phase which we have not known before. So frankly, we cannot know what's going to happen, right? Raghuram Rajan has put it beautifully when he says we have not understood the ramifications of aging.
Fair point.
Right? So we don't know what's going to happen there.
But Mr. Jhunjhunwala, the environment is such that rates will be low, liquidity would be abundant, and growth again would be scarce, or growth will be precious. So how does one go about investing in this kind of environment? Because investing is all about buying earning power.
I am not going to allocate any of my portfolio, but if some part of the portfolio should be in gold, because that's one asset where if there are going to be negative interest rates. I mean, I go crazy when I think I have to pay a bank to keep money with the bank.
Did you say gold, sir?
I said gold.
Coming from a person who's a die-hard equity fan.
I'm saying I'm not going to put any money into gold, right? But I will get gold purchase of some part of the assets.
But gold typically does well when there is fear.
No, but gold will do well when every country in the world wants to, bring down its currency.
Okay.
Right? Then what will happen?
Fair point. Now, if I look at the trade setup, two of the crowded trades in the world are reversing. So the biggest crowded trade was long dollar, the second biggest crowded trade was short crude. They both are reversing. Crude is up substantially, dollar index has come down in a linear manner. So do you think somewhere this is also an indication of normalization?
See, I was also thinking, why is it that the dollar is falling in value? Actually, what has happened, the major trading in the dollar is against the yen and the euro. Now, in the yen and the euro, you have had the maximum, the loosest monetary policy that is possible. I mean, you have negative interest rates. Yeah. Now, it is a fact that you cannot go, say, 0.25 basis point, you can't make it 0.50 basis negative point. Plus, the Eurozone and Japan have a current account surplus. So, I think that is why that trade is, and I think I don't make so much of the rise in the crude price. You have a fall from 110 to 28 and then you come to 45. I mean, unless until it crosses $65, $70 level, it's just a correction in the bear market.
So, commodities are in the bear market?
They are, and they are going to remain in Europe.
But the problem with the commodity fall has been that companies, they lose earning power, and I think that's why market went wrong in 2016.
No, but the money is gained by somebody also, no?
Okay.
And if they lose, it's not that companies become very unprofitable because there's no problem with the biggest commodity companies. I mean, what is their name? I'm not talking of Glencoe. I'm talking about the manufacturers. You have BHP Billiton. The others, they are doing fine. Yes. They are increasing production.
So we should not get confused between commodity prices and the commodity demand. Commodity demand, to your mind, is looking strong.
No, commodity. See, first of all, there are two reasons when prices fall: an abundance of demand, abundance of supply, and a lack of demand. I think both are contributing. Because when the commodity markets were in a bull phase, the kind of return on equity you are getting, people are just putting up capacity, and all that capacity is coming on stream.
What do you make of the earnings so far? I mean, we've got pockets of outperformance, pockets of underperformance. It's been a mixed bag.
I can only say one thing: once Indian companies get volume, you will be surprised at the growth in earnings, and that's already happening in a lot of mid-cap companies. Wherever there is volume growth, there is disproportionate growth in profits.
A name case would be Escorts?
And I think 16, 17 profits will surprise you, and the growth will be far greater than FY15 and FY16. If you want to know 5%, 10%, 15%, 20%, 25%, contact Ramdev Agarwal, he knows best.
No, I'm just trying to understand from you.
Well, I don't do all that.
But in terms of a trajectory, you think earning expansion, margin expansion, growth expansion is here?
Yeah, absolutely.
What gives you the confidence?
The volumes, the demand, and second thing is, a lot of companies that are in difficult times, a lot of companies bring down costs. That is when some of the mid-cap companies were seeing such rise in profits.
Last time you made a point that the valuation risk with mid-cap is higher than large-cap. But now that mid-cap companies are doing better, what do you make of the valuations?
Valuation risk is still higher.
You think that small and mid-cap stock valuations risk is high?
No, it depends on what phase you are. Okay. In the initial phases of a bull market, you make a lot of money by buying mid-cap and small-cap companies. But longer term, I have learned with great pain and bitterness that always pays to buy the leader.
So stick to the leader. But do you think, are we in just beginning of a bull market, or where is this bull market?
I mean, I think we had one phase which went from 6,300 to 9,100. Yeah. I think we corrected that phase thoroughly, more than that I thought it would, and we started another phase.
In December, you told me that.
Right,
just a couple of points, sir. It's relative for you to get us there. 5 more minutes, and I'll quickly wrap up after that. In December, you told me that you were super bullish about pharmaceuticals.
Yeah.
Given what US FDA is doing, and pricing power is coming down for pharma companies.
Right.
What's your view now?
I'm still bullish.
What gives you the confidence?
I'm bullish in this. Do you know one thing? Indian pharma supplies 40% of American generics and has 7% of value. If we have to have, if this 40 is to be 50 and we have to go up a value chain, what is going to happen? See, I look at it in a very simplistic manner, that Indian costs are very, very low. Indian companies are getting size. Indian entrepreneurs have understood the market. Why will these companies not grow? And the home market is an absolute lottery.
So this is you think the pharma story, the Indian generic story is strong, and you are not disturbed with the news flow? Not at all.
Sir, every rise has problems.
So Lupin is your holding and you remain committed to it?
Well, Lupin is my holding. I want to comment. I may sell tomorrow, I may not sell for 20 years.
We're talking about today.
I still hold Lupin. Right, I hold Lupin and Arvind, both of them.
Are you happy with the disclosures from Indigo?
So now this time they disclose everything properly.
But your theory of betting on decline in crude and buying a market leader in aviation, that theory is still there for aviation.
Absolutely. And you buy clearly as a market, you're going to add 34% to capacity.
We've had 2 bad monsoons. Last time you told me that we've never had 3 bad monsoons. This time I'm keeping my fingers crossed.
See, statistics is nothing but a lie. But I don't see any reason for the prediction that La Nino is coming, all that. We'll have a, you might forget about you and me. Look at the cattle, look at the people who don't get water. Let's hope for them at least.
Of course.
They get the monsoon is good.
Like Shankar Sharma once told me that Hindustan ke andar 33 crore Devi Devta hai. So I'm sure people are hearing us and people are sort of watching us also. So good time is coming for the agrarian economy according to you.
Should.
Rallies, escorts, these are the kind of ideas you've had.
Whatever you feel.
No, I'm just trying to, I'm not getting into stock tip with you. Please understand, I'm not going to talk your book. That's my commitment to you. But I'm just trying to understand. You know, my heart froze when you told me that Tata Motors was your largest investment.
It is.
And it is still. Aren't you getting confusing signals with China?
I'm not confused. See, for 1 month, instead of 15% growth, you get 11%. People are concerned. I mean, I don't know. So I still feel that JLR will be a tremendous hit. In the next 5 years, it sells at least 98,000 to 1 million cars. And India also, telco will, revive very well.
So the new models which they are getting a new platform, they're getting new models, revised versions. Is that making you hopeful?
That's part of the reason.
That's part of the reason. They have debt. Rarely Indian companies have debt on
their balance sheet. Why do you discuss telco so much here?
It's your largest holding.
So what here? It's my holding. Investors should not be concerned with my holding here.
Of course. I'm going to ask you 2 or 3 final questions, and I promise I'll not extend my appointment with you after that. The average rate of return now, do you think should come down because interest rates are coming down globally? For equities in general?
Not necessarily. Let us see if return on equity comes down. And also I feel valuations in India will remain high because I think lots of local money is going to come. I'm like a parrot repeating for so many years. It's come in a trickle, but I think it will come in a flood with time too.
In 2013, once I interacted with you, you told me that market itna sasta hai, aisa lag raha hai, chori ka maal mil raha hai. That valuation comfort is not there. Is there
Why?
a case
It depends on certain.
But we've seen a strong P-expansion, sir, in last couple of years.
Well, the average of the Nifty is still not high. We have seen, there are certain, companies with market terms as quality companies, high cash flows, dividends, good quality of profits. Their valuations are quite demanding. Otherwise, I don't think valuations are demanding. So in general, if you have to summarize today's interaction, your market message would be that whatever government has done, they've done it sensibly and they've thought through it. Yeah. It's not an act of immaturity. No, I think they have thought and contemplated for 6 to 9 months before doing it and done it beautifully.
Would you like to thumb the table and say that you're bullish?
I'm bullish.
No, I mean thumping the table just
you have to thump of a person whose bullishness you doubt here. I don't have to thumb to prove my bullishness.
So when do you think we could see a new high? Will it be 12 months? When do you think we could see a new high on the Nifty?
Who knows here? No, I mean, I'll have to ask my son when he comes from school here, he'll tell me.
No. But what's your sense?
Who knows all this here?
Okay.
If I knew all this, I'd have all the wealth of the world.
Of course. So what keeps Rakesh Jhunjhunwala going? I always ask you this question. Last time you told me that you want to slow down in life. BB ke sath rehna, bachcho ke sath khelna, that's your new mantra. But the way you engage in the equity market looks like you're married more to markets.
I'm married more to my wife won't mind that. Only I should be married to another woman.
Final question. Is there any day in your life you've not looked at markets?
Yeah, there are days when I'm on a holiday in America, I'm never looking at the markets. So if I don't trade, there's nothing I have to look at. It doesn't matter. Even when I trade, I don't look at markets sometimes.
And if I have to get a one-word answer from you, in the medium term, in the short term, in the long term, you're bullish. Short term, medium term, medium term.
About India?
About India.
I'm bullish in the medium term and in the long term and in the short term. Because long term India is also going to grow 9%, 3 lakh roz khane wale nahi paida hote. In a country's basic model by which growth can come. See, the improvement in India's ability to grow is a journey, not a destination. That is improving day on day. So, how can you be bearish, sir? If you are bearish, buy RBI bonds. But you live to regret it.
When I walked into, yeah, of course, and I take
you said that was the last question.
Yeah, so just a closing comment. When I walked into your room, it says that invest sensibly.
Huh?
Invest, but invest sensibly.
Yeah.
So how should one invest sensibly? For a retail investor, I'm not getting into
buy the best mutual fund manager.
Buy the best mutual funds and stick to SIPs. That's the best way to do it. And gold is something which could really give us a surprise.
No, I think because there is going to be a lot of uncertainty. There could be a lot of uncertainty in the world. it's a good, I mean, I don't say put a major portfolio, but maybe low single digit allocation somebody should do.
I know I've extended my appointment with you. Really appreciate your time. So glad you could join us.
Thank you.
So that is back to the studio.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.